What is value investing, or as some call it, fundamental way of investing? Welcome to Option Panay 30 Days Trading Challenge, Learn to Trade Challenge, where we will get you started with your investing or trading journey in 30 days or less. And in today's tutorial, I'm going to talk about a very important topic, which is the value investing or fundamental analysis. What is it? Who does it? Does it work? Or if you were to follow this approach, then how do you follow this approach? Let's begin with that. What is value investing or fundamental analysis? Both the terms are used interchangeably. Some people call it fundamental analysis investing. Some people call it value investing analysis. But basically, what it means at the end of the day is that you are evaluating a business and you're buying it for lesser price than what it is actually worth. So you are deriving the value. Just a simple concept. For example, if you wanted to buy certain stuff and you see a sale going on and you think that this product that you are purchasing in the sale is much more valuable and you're getting it at a discount, you just rush to the store and you buy it at a discount. So you figured out a way of purchasing a product at a much lesser price than what it is worth. Now the key question is, where does it come from? What does it entail, and who is actually doing it? You see, the value investing, whenever we think about value investing, there is one legend, living legend that comes to our mind, and that is Mr. Warren Buffett, who has been investing for the last 55 years, and he is, the ideal investor, the legend investor when it comes to the discipline of value investing. It was originally invented, if I were to call the term, invented by Mr. Benjamin Graham and David Dodd at the Columbia Business School in 1930s. And Mr. Buffett happens to be one of those, who learned from the master himself, who was Benjamin Graham. It is a fabulous approach, and it basically, digs deeper into analyzing the company, understanding how the businesses are operating before you could, make a judgment, or, you are going to part with your dollars. And typically, value investing also means that you are buying and holding usually for a relatively longer time period. And that time period may run into, not days, it may run into years, and sometimes it may be even decades as well, because you believe in that business. So if you were to look for inspiration, who are the famous investors that probably you could follow along and seek inspiration from? So in the US, it will be Warren Buffett, top of the list. Then there will be Seth Klarman. Then you will also find Benjamin Graham. You will find Joel Greenblatt and Peter Lynch, many other who fall into that category of value investor. And if you are looking for some inspirations to other countries, the one name that came across quite often, especially from India, is Mr. Rakesh Jhunjhunwala. And in recent times, we also heard of, the great Mohnish Pabrai. There are many other people who have done this. And if you want to dig deeper, I would suggest that find out about these great investors, learn from them, and see how they approach the value investing work. The second question that most often is asked, does it really work? Well, if you look at most of these investors, they have produced astounding results. Mr. Buffett himself, over last half a century, like 55 years, it's not a small period. 55 years, he has generated on an average about 20% compounded annual growth rate. Now, 20% is a lot. This simply means that like almost every 4 years, you're literally doubling your money. That's what it means, like 20% per year. And there are many others. If you are watching from other countries and you have some legendary investors in your country, please make a comment in the comment section below and let us know who the famous value investors are from your country or from your geography. Now let's dig deeper a little bit, understand a little bit more about value investing, how to approach it, and what does it mean. But before we dive deeper, let me remind you, if you are new to this channel or this is your first video you are watching it, I would suggest that you start from day one, so you know exactly how we reach to this stage and what are the pre-work you need to do before you could really digest the concepts that we are discussing in this video. And what's up, you all? This is Manoj. This is your coach Manoj at Option Pundit, the number one website for smart traders and investors. Read through our websites, go and educate yourself. There are more than 900 blog posts we have for you, and to educate you as well and to share with you the perspective that we have about the financial markets. And if you have not yet subscribed to our channel and if you have not hit the bell icon, I suggest this is the right time to do it. Hit the subscribe icon, click the bell icon as well, and make sure that you are in touch so we can notify you with our new tutorials at the fastest pace possible. Okay, so now once we understand what is value investing, let's just think about how do we learn, how do we approach value investing business. Well, the very first thing is you got to learn how to value the business, right? You have to figure out the current existing value of the business and the future value of the business. And current value of the business simply means that if you were to liquidate that business in itself, what sort of value will you be getting? And that's like instant with a margin of safety if you can purchase those stocks at a cheaper value, right? So imagine like, if you were to buy a car and you buy a brand new car, but you get it at half the price. So you know immediately that the new car's price is so much and you're getting at the fraction of the price, and there's a margin of safety, and you don't really have to think too much as long as you have the capital and you know where you can sell that car later on. Now it's not that easy when it comes to the stocks, but you get the idea that you have to figure out the value of the business in its current form. Sometimes it is also called liquidation value. If you were to just liquidate that company itself, then how much money can you get for it? And that is what how you value the current business. Of course, this video is not a course about value investing per se, but this is to exactly introduce you the concept of value investing and tell you what are the things you need to do to value the business. The second part of valuing the business is the future value of the business. Now, how do you find out the future value of the business? At the end of the day, any business value is coming from three key factors. The first factor is the business in itself. What type of business you are in, what type of segments are you in? Is that business growing, or is that business dying, or the business is just about to take off? You have to figure out that business and the size of the market so you can evaluate that, right? The second thing is the people who are running the business, because if the business is being run not by the people who cannot safeguard the interest of the business or the shareholders, and how to grow that business and take it to the next phase of that, it will be hard for that business to continue to deliver that value, right? And the third is how these people are actually running the business, which is sort of like operational efficiency of that business. So you may dig deeper, find out more about value investing, learn more about value investing. And by the way, I'm going to share with you a way to learn that as well for free. Okay, I'm going to share that. Hold on to that for a minute. But once you understand business fundamentals, those three things, you figure out what the business is and what segments and etc. this business is actually operating, who the people are behind the business, running the business, and thirdly, what sort of efficiency they are operating the business with. So once you've figured out how to value the business and to get at a price and the market is offering you at a price, then you are ready, you allocate the capital and you're ready to invest in. Now let me show you some examples and things where you can find out more about value investing and learn about value investing. So what I have with me is one of the first book. It was written by Mr. Benjamin Graham, who was the mentor of Mr. Buffett himself. And this book you can probably pick up in your library, or just go to the nearby bookstore and buy this book. It's an amazing book. It's called The Intelligent Investor. And if you meet with any of the financial analysts, chances are they have gone through this book. The concepts they learn, the application is coming from this book as well. Now, this was an abridged version of what Mr. Benjamin Graham actually originally wrote. So let me just tell you or show you the granddaddy of all the value investing. And how do you learn about that is this book called The Security Analysis. Okay, you can find this book in your nearby library, or you can get this book at the nearby bookstore. Get the book, learn the concepts, and Mr. Benjamin Graham is explaining you exactly on how to value the business. Now, this book was written almost like 100 years ago. And you might say, hey, things might have changed. Well, things might have changed, but the basics don't change. You will still learn how to value the business. You will have to apply the current context to that business and modify your value investing approach. So once you've gone through these analysis, once you've learned how to actually analyze the companies, the next thing will be to do the analysis for yourself, by yourself. So where do you find out these numbers, where to look for the data? And I'm going to show you that as well. So let me show you where to find this data and analyze the companies by yourself. So what you see on the screen is finance.yahoo.com. It's a free website, and you can simply enter any stock symbol here. Let's say we are looking at the company called, say, Disney, for example. You enter Disney, the stock symbol is DIS, and of course you should know the stock symbol of the company you're looking for. And for Disney, then you can see the details about Disney, and you can read some of the news, etc. I usually bypass the news when I'm looking at the financials of the company. And then you click on financials. When you click on financials, you can find all the historical data or the current data about that particular company. Okay. There is one more reliable source for you to look at. This is called Routers, and I'm going to share that with you as well in a minute. But I want to show you, you may think that is it only for US companies? No, it's available for other companies as well. So for example, if I'm looking for Asian Paints, I enter Asian Paints, and you can see it gives me the price for Asian Paints, currently trading at $3,358. And you can find out the financials of Asian Paints as well. Those are given to you, and you can run your numbers. You can only run these numbers and make sense of it once you have studied. And I showed you those two very, very powerful books that you can buy, purchase, or get it, borrow it from a library, and read how to analyze those numbers. And then based upon this, you can evaluate whether this company is worthwhile or not. Let me show you one more example of a website where you can find all these data, which is nicely organized for you to do that. What you see on my screen is the website called Routers, REUTERS.com, and you enter the company and you will find all the metrics that have been given to you and organized in a nice way. You look at price and volume, you can find what were the prices. You can also look at the per share data, and if you're looking for valuations, you can find P by E's and etc. You can also look at financial strengths, margins, management effectiveness, and they have neatly organized the data for you, so you can evaluate this data and see whether or not these companies are meeting the criteria that you have set out for. Now, when you dig deeper and you try to find out more about value investing and you learn from different programs, there are some amazing programs where you can learn, but make sure that you are really learning how to value the company and you're not making the shortcut. Now, what do I mean by shortcut? A shortcut is that some people will look at just the comparables and say, okay, EPS is below this, price to book ratio is below this, and if ROI is below this, and so on, and then this company must be cheap. Well, those ratios might be cheaper because there is a reason for it, right? So you have to figure out whether or not those numbers that you're looking at are really relevant with regards to your analysis. So you really need to do the number crunching, put together your spreadsheets, and analyze these companies one by one to see whether or not that company passes the litmus test of the numbers. And if it does meet those things from a numbers point of view, then it might be a good idea to invest in those companies if you believe in the long-term value investing purpose as well. Okay, so there are many websites available on the worldwide. There are many resources, tutorials available for you to learn and find out more about value investing. But here is a secret, and the secret lies with you doing the numbers, you doing the analysis, and figuring out whether or not this company is worth whatever you think it. And the reason for that is because when the markets goes through ups and downs, during the time, if you were just relying on somebody else to buy that company, then your conviction in that company will not be true. Now, let me tell you the pros and cons of value investing so you know exactly the point I'm trying to make. What you see on the screen is Mr. Warren Buffett's return since 1965 until 2020. That's 55 years of returns, right? Now, look at this. In some years, you will find the results are great, while on some years, you will find the results are not so great. right? But overall, he has beaten S&P 500 by like the factor of 2. Hugely profitable, right? So you must be willing to weather this volatility in the price which is happening while you're holding that company. And you can only survive through that market volatility if you trust your numbers. And in order to trust your numbers, you have to run the numbers by yourself. You have to do that analysis by yourself. So you believe in your analysis, you believe in your research, and then say, okay, yes, I believe in this, and I think this makes sense. I can hold on to it even during the ups and downs of the market. And that's really the key when it comes to value investing. Don't just try to benchmark it in relation to what other industries are doing and how the industries are doing. That's just a minor factor. That is just the tip of the iceberg. You really need to understand and dig deeper into various types of the fundamentals. So once again, what I believe in is that there are three major types of business fundamentals that you have to look at it. One is the business in itself, and the second is the people who are running the business, and the third is how those people are running the business from an efficiency perspective. And that's a simple categorization of many factors that you have to really get to know when it comes to value investing. Now, here is the thing. You will have to do that research for each company that you are interested in. That's what is the value investing, to discover the value, to discover the hidden gems, right? And there are more than 5,000 to 6,000 companies listed on the US stock market alone. And similarly, thousands of companies listed on, say, NSE or BSE or Sensex, or Sensex is actually 50, but listed on NSE. Similarly for other parts of the world as well. So the key question will be, how do you figure out? How do you do this? Of course, you can take advantage of the tools and scanners and etc., which are available to shortcut your search. But at the end of the day, you will be doing that research by yourself. Are you willing to do this? And does that like fit to your trading style? And I'm going to cover in the next tutorial to talk about a shorter term approach where you don't rely really so much on all these factors in the research. And that study is called technical analysis, where we use some market techniques to figure out short-term things, scan it and figure out short-term techniques to get into it, use some indicators and make that approach, which is not really dependent upon so much of the fundamental analysis. But we'll talk about that in the next video of technical analysis. So the homework for today is, what are the key things you learn from a fundamental analysis perspective? Secondly, does this approach attract you? And if this approach attracts you, why does it attract you? How are you going to address the issue of analyzing thousands of companies? What will make you confident in your value investing data? So once again, let me just repeat the homework. The very first homework is, does this value investing approach attract you? If yes, why? And thirdly, how are you going to address the issue of having thousands of companies that you might have to analyze before you could make that call of investing into that? Once again, this is Manoj, and if you have not subscribed to our channel, YouTube channel, make sure that you hit the subscribe button now, hit the bell icon so we can send you these trainings and tutorial at the fastest pace possible. We can keep you informed with the new trainings. And if you're enjoying it, please hit the like icon, hit the like button, and send us some love. See you in the next tutorial. Till then, stay safe, stay healthy. This is Manoj.